Welcome to the deep dive. Today we're going to be looking at Black Swan events, specifically how they impact the stock market. So get ready because we're about to uncover what makes these events so impactful and honestly kind of unnerving for investors.
What's fascinating is how Black Swan events really expose our reliance on predictability, especially in a system like the stock market that relies so heavily on analyzing past trends.
Yeah, for sure. And all of the sources you gave us really highlighted that. So before we dive into all the historical crashes, let's just make sure we're all on the same page about what exactly we mean when we say Black Swan event.
Okay, well, the term was really popularized by this guy, Nassim Nicholas Taleb. And Taleb laid out three main characteristics for Black Swan events. First, it's an event that comes as a total surprise. No one, not even the experts, sees it coming. Second, it has this massive impact, really shakes up systems and often causes widespread consequences. And third, and this is where it gets interesting, it's often rationalized after the fact as something that people should have been able to predict.
It's like we all convince ourselves that we were so close to seeing it coming, but it's just hindsight bias, right?
Precisely. We try to impose order on the chaos after the fact, but Black Swan events really remind us that the world is just inherently unpredictable.
And the stock market, even with all of its algorithms and models, is really vulnerable to these events.
Oh, absolutely. The stock market relies on historical data to project future trends, but Black Swan events just completely defy those trends. They throw a wrench into everything, and traditional forecasting models just can't account for them.
Which brings us to some real-world examples, and the first one that comes to mind is the 2007-2008 financial crisis.
It's really striking that the 2008 crisis just revealed how interconnected the global financial system really is. A seemingly local issue in the U.S. housing market triggered this cascade of consequences that spread across borders, led to trillions of dollars in losses, and required massive government intervention.
It's almost like a domino effect, right? One thing leads to another, and suddenly everyone's in this huge crisis that no one could have predicted.
Exactly, and it really underscored the limitations of even the most sophisticated risk management models. Black swan events show us that we can never completely eliminate risk.
Which makes the next example, the dot-com bubble, even more fascinating. The late 1990s and early 2000s were a wild time for tech stocks, and I remember thinking, this can't go on forever. But so many people got swept up in the hype.
The dot-com bubble is like a textbook example of how irrational exuberance, a lack of proper risk assessment, can create the perfect conditions for a black swan event. The internet was new territory, and while there was potential there, valuations just became totally detached from reality.
And when the bubble burst, it took down a lot of investors who thought the internet was this guaranteed path to riches.
Yeah, it's a cautionary tale for sure about the dangers of herd mentality and how important it is to just maintain a critical perspective, even when everyone around you seems to be making a fortune.
And then there's Black Monday in 1987. But there's still no single agreed-upon cause for such a dramatic single-day crash.
That's what makes Black Monday so unsettling. That sheer unpredictability. Computerized trading was relatively new then, and a lot of experts believe it played a role in amplifying the sell-off.
So it's not just external factors like pandemics or economic downturns. Sometimes it's the very technologies we create that can contribute to black swan events.
Absolutely. New technologies add complexities into the system, and those complexities can have these unintended consequences that are impossible to foresee.
And speaking of unforeseen consequences, the COVID-19 pandemic in 2020 really fits the bill for a modern-day black swan event.
Absolutely. The pandemic and how it impacted global markets really showed just how vulnerable our world is to sudden, unexpected disruptions, especially with how interconnected everything is. No one could have predicted the scale of the lockdowns, the supply chain disruptions, and the economic fallout was fast and severe.
That definitely reinforced the idea that we need to be prepared for anything. The sources you provided also mentioned the collapse of the long-term capital management hedge fund in 1998, another example of how seemingly isolated events can ripple through the entire system.
The LTCM case is really interesting. It involved these incredibly sophisticated investors, people who really thought they had hedged against every possible risk. But then the Russian government defaulted on its debt, and that triggered a chain reaction that completely brought LTCM to its knees. It shows that even with the best intentions and risk management strategies, black swan events can still catch us off guard.
We've been talking about what black swan events are and how they've impacted the stock market throughout history.
And now I think we get to the part that everyone's been waiting for. What can we actually do to prepare for these types of events, these unpredictable events? because it feels like even the experts don't see them coming, so what hope do we have?
Yeah, that's the real question, isn't it? But the sources you send over do have a little bit of hope, suggesting there are actually steps we can take to navigate all of this uncertainty.
The first thing, and probably the most important, is shifting our mindset. We have to get away from this idea that we have complete control and just accept that the future is unpredictable.
So just accepting that black swan events are going to happen, they're not just these like freak occurrences.
Exactly, yeah. Once we accept that, then we can start building more resilience into our investment strategies.
And that starts with understanding like what causes these events, right? The sources we looked at touched on a few things.
Right, yeah. One major factor is just how complex our global financial systems are these days. If you think back to the 2008 crisis, that web of connections with all those mortgage-backed securities and derivatives across so many countries, it created a situation where a small problem in one place could trigger this huge domino effect that impacts the whole system.
It's like a house of cards. You take away one card and the whole thing collapses.
Exactly. Another factor is human psychology, how we think. People are prone to herd mentality, especially when things are uncertain, like the dot-com bubble. People saw others making tons of money from tech stocks, so they jumped on the bandwagon, ignoring the warning signs, not even looking at the fundamentals.
Yeah, that fear of missing out, it's powerful. But it can also lead to bad decisions.
Oh yeah, for sure. And sometimes the regulations or lack thereof can actually make things worse. If regulations don't keep up with all the financial innovation, it creates these loopholes that can be exploited, and that leads to people taking too many risks. Our sources mention the repeal of the Glass-Steagall Act, saying it might have contributed to the 2008 crisis.
So complexity, human behavior, and then these regulatory gaps can all come together to create a black swan event. But if we know that, what can investors do to protect themselves?
One important strategy is diversification. Don't put all your eggs in one basket. Spread your investments out across different asset classes like stocks, bonds, real estate, commodities, and different regions.
But that way, if one area gets hit, it doesn't completely destroy your portfolio.
Right. Another key strategy is managing debt. Having too much debt can make the negative impacts of a black swan event much, much worse. So keep your debt at a manageable level. That way you have the flexibility to deal with unexpected stuff.
Yeah, so it's about building a safety net so you're not completely caught off guard.
Now, here's a strategy that might sound kind of strange. Embrace black swan thinking when you're thinking about investments.
That's interesting. What does that even mean?
Basically, you need to remember that traditional forecasting models have limits, and you also have to consider scenarios that most people don't even think about.
So instead of just focusing on what's most likely to happen, we need to also think about what could happen, even if it seems unlikely.
Exactly. Ask yourself, what are the potential things out there? Things that could disrupt my investments, things that I don't even know about.
It's about, like, expanding how we think and being ready for more possibilities.
And remember, even when things are uncertain, knowledge is really powerful. The more you know about black swan events, the better you'll be able to deal with them.
This has been super insightful. I think we've all learned a lot about black swan events, how they happen, and some practical stuff we can do to deal with them.
But as we wrap up this part, I want to leave you with this. Don't let fear of the unknown stop you from doing things. Use it to motivate you to learn, to adapt, to become more resilient, not just with your investments, but in life too.